Very good morning and welcome to today's Trading European Open live here at the Live Trade Room. Now today is Tuesday the 30th of October And what we simply look to do during this particular session is trade the markets with live capital. That's the first thing to say. Then what we do is we look to identify some high probability trading opportunities that we could look at for the session ahead. And what you'll see us do is execute with a high degree of consistency in our approach and manage those trades with discipline, making sure we don't expose capital unnecessarily to these trades. And with one aim, and that's to book in consistent returns when we trade. So we look to cut our losers short as quickly as possible and let our winners run. So that's what you can expect. So just before we begin, if we could start as we always do with our risk warning, just please do familiarize yourself with the risk warning currently up on screen. Fantastic. And before we begin, it's important as a trader that you have an understanding of potential market moving news. Of course, you don't necessarily want to get into a trade to a major news announcement from a central bank, for example. So if you are aware of the news flow, then you will be trading these markets from a position of knowledge and understanding and being informed about what is actively going on in these markets. And as we look at, obviously the clocks have now gone back. So the times have all changed accordingly, and what we're looking for is some high impact news events, and this is the impact here in this column, and we often look for the high impact news events, and at 2 p.m. we do have a consumer confidence figure impacting the US, and we've got a number of central banks speaking this week as well. We've got the BOJ on Wednesday. Significant event, and we have the Bank of England on Thursday, and then we finished the week with an equally important event, which is the non-farm payroll event. So a busy week. Each day will have its own almost agenda, really. So this is Tuesday the 30th of October. So we've got some GDP figures, flash GDP figures coming out impacting the Eurozone. Nothing of any major concern. Of course, there was the announcement that Angela Merkel is stepping down from her role, and she's been a fundamental part of the European project for the last, I think, 13, 14 years. So she's decided to step down at a pretty crucial stage, really, in certainly negotiations with the UK with regards to Brexit. Interesting move at this very crucial stage. So it just remains to be seen how Europe responds, and I'm sure the impact that it will have on policy moving forward could be quite significant, and we'll see who kind of takes over in that role. So interesting times for Europe once more. And what we'll do is we'll look at the consumer confidence figure at 2 p.m. These are all UK times, and we have a central banker speaking tonight, Paulo's from the Bank of Canada at 7:30. So not really a major concern unless you happen to be trading the Canadian dollar. Okay, so what we'll do now is we'll get up on our trading platform, and there is a few decent opportunities that we're looking at very, very closely. We are interested in selling the euro dollar. We do anticipate this market to continue lower, so we're not going to spend too much time. We're going to come back to this very, very shortly and see if we get that move further to the downside. Same situation with the pound. We do like this market below the 27.77, so we're going to have a look at this market as well. No surprise to see this market squeezing lower from these levels. So we'll come back to those. The sell-off in the yen could be quite significant, and we can look at the strengthening US equities, or we can look to get into the dollar yen, and pound for pound we've just chosen the dollar yen just to get in this market above 112.89. So we'll see if we get some continuation in that market as well. Yeah, you can obviously see we're getting continuing strength starting to creep in against, apart from the Canadian dollar, and also as well the Aussie dollar and the New Zealand have strengthened over the Asian session. So so really we're focusing on the euro dollar, pound dollar, and the dollar yen potentially over the course of the day as far as the dollar pairs are concerned. So when we look at the euro pound, the euro is strengthening today against the pound. You can see that this is there is a structural failure in here, but we've got a really strong pullback, and we're now breaking above this level of resistance at the 88.95. Very likely to continue higher. We obviously don't like the potential for trading weakness versus weakness. So although it might squeeze to the upside, it doesn't give us that high probability opportunity that we ordinarily look for. The pound and the euro are strengthening a little bit against the yen, but even the yen is going to be very likely to sell off a little bit today. So again, we're not really wanting to go head to head with weaker currencies. So that's all a part of our trade selection process. You know, that's how we determine what to trade and what not to trade. Now, as some strength starts to come back in to the US dollar, it would as a result give us an opportunity to sell the gold now at 12.24. It doesn't really give us a fantastic opportunity because there is, I suppose, we've got this level here, we've got the weekly low. We've probably got to move maybe back to 12, something around this kind of level in here. Sorry. So we can expect this market to maybe pull back over the next few days, certainly if the strength continues. We will, I think, focus on the currency pairs just for the morning, but this is, we do expect this market lower. Not much happening in the US oil, so we'll keep an eye on the oil markets. We've kind of had the move really. We're trying to bounce back off the lows and not doing it that successfully. So we might come back to that in the afternoon. The US equities, a little bit of a bounce off these lows, off the back of the potential that Donald Trump is. I think there's great potential for you know, a suitable trade deal, so it's eased tensions a little bit. Yesterday it was announced that the US would be almost giving China a bit of a deadline and saying that you know, something suitable needs to be negotiated by early December, or there's going to be more tariffs on other products and services. And that was obviously not really a good stance, but it seems to have softened that position. And as a result, we've got a sell-off yesterday, the latter part of yesterday's trading, and now we've got some buying coming in across the board. So, and the FTSE, very likely to benefit from the depreciating British pound, and the Euro stocks is in a period of indecision really. So really all eyes on the currency pairs. We can certainly have a fairly strong focus on that. What we might do is, I tell you what we'll do, we'll put it, we'll split the screen into quarters, because I am going to add the gold market to this list. So so we'll stick the euro dollar top left, we'll put the pound bottom left, and now what we want to do is we want to add the dollar yen. We'll put that top right for now, and we'll put the gold market. We'll have a look at this as well on a 15-minute time frame, so we can just see how these markets are just beginning to unfold. So, so as we can see, we've had a bit of a move below the 1360 level. That represents yesterday's low, as you can see just in here. So it is quite an important level, but we've had a bit of a bounce off that level. So we can be a little bit more patient with this. The market that's giving us the opportunity sooner rather than later seems to be the British pound. So let's go and have a look at this one. So we're interested in selling it below the weekly low, which is the 27.77. What we'd like is a little pullback to that level and then look to sell it around the 27.77. So let me show you where we're at. So this is an hourly time frame. We're getting the kind of the nice strong run up, which is what we want to see. A break below 27.77 and this market pushing lower. And now we want to see it actually pull back to the 27.77, in which case look to get into it on the pullback. So we just need to be patient and just wait for that pullback opportunity. Let's do that analysis just again on the 15-minute. So it's a little bit, it's not as clean cut really as the pound. So we've got this little move lower yesterday and then a bounce back, and now we're slowly grinding lower. So you almost compare that to the clean cut break below 27.77. So let's allow this market to pull back and we'll see if we can capitalize on it. So we still expect this market lower. However, it's just worth keeping an eye on and just waiting for that high probability trade to kick in, and that could be a good trade for us. So gold is the next market, which is now moving to the downside. So I suppose a level from a technical perspective that's just worth just monitoring would be this level of support. So we're actually getting a little bit of a break of this. There's no need to rush to get into this market, as long as kind of the rhetoric and the fundamentals stay the same. It might ease tensions on the gold market, and we're likely to see it squeeze lower. So for that reason, we kind of want to give ourselves an opportunity to get in on a pullback if we possibly can. So if it can bounce back to this level in here, the 123.85, somewhere in around there, it might give us a good opportunity to sell it. So actually, the gold market could give us the better opportunity sooner rather than later. But just to let you know that the idea behind the trade is purely dollar strength. That's why when you trade the gold market, it's correlated with the US dollar, well, negatively correlated. So we have this level in here, the 112.89. So what we don't necessarily want to buy it below that level, but if we get a break above it and a pullback, we'll be looking to get in at that point. So so let's allow these markets to pull back. So we have the 112.89 just above. We're currently 6 pips away. So let's see how it interacts with that level. What we can do is we can start putting in our levels, and even if we get a break below 12.22.55, we could use the high that's created to place a stop loss. So we're getting that pullback now, which is what we're looking to see happen. So what I'll do is I'll just get up the screen. Oops, excuse me. Sorry, I'll just get my pen up on the screen and you can so that actually there is a bit of an opportunity in here, maybe in the euro dollar at a slightly higher price. If this market sort of pulled back a little bit further to the 1370 and just looked to turn around, then that could be a slightly cost-effective, let's say, entry price. We'd certainly have a relatively small stop loss, so it might be worth looking at. So now we're getting very close to the levels at which we are looking to look for opportunities to sell, and that is primarily a move back to this level to actually take it to the downside. That level just sits in here for the euro, and this level in here for the, so it looks like we're already getting that. So let's take this off. Let's see if we can get into the gold market. So we're looking at it on a minute time frame. So let's see how this price action starts to unfold. Even on the minute time frame, we can see the descent. We can also see the potential for a little bit of resistance at this price. It's also got this ascending level, so let's see how price behaves around this, and if it looks like we're going to be rolling over to the downside, then we'll look to perhaps get into this market at that point. So just posted there up on our YouTube channel. Just you know, do feel free to ask questions or do comment, make any comment as you wish, and perhaps there's other trades that you're looking at as well. Do let us know what it is you're trading. It's always interesting to see how you what markets you look to focus on, and we can assist you in that process as best we can as well. So there's an element of kind of an open floor as well during our trading sessions. So you can see we're kind of running into resistance now. So we just kind of want to wait and see if we get the turnaround. So a little bit of indecision at these levels. So when you get those close, and now we've got the close at the level of resistance. So if we get this market just rolling over, it now gives us the potential to sell this market. We want to do so at more appropriate levels, so we can get into this to the downside if we just get a little squeeze lower from these levels. Okay, so let's try and get into this market at this stage. 24, 34. So, yeah, from a risk perspective, it's important that you understand, I suppose, the trade size that you would need to be trading with the capital we have available, which we're looking to take 1 mini lot trades in the gold market. So our exposure is about $16, $16.80. So we like to look at on average across the board, we look at an average exposure of about $15 per trade, and that absolutely does vary from trade to trade. So all we've done is we've been patient. We've seen the market bounce off the 12.22. We've had a little bounce back into resistance, and then we've seen the close, the red candlestick, with the expectation for this market to move lower. So let's see if we get that opportunity. We're looking to do the same now for the pound market, so let's see if we get that opportunity as well. So you can see we've come back to this level now. So, you know, do we get this little rollover from this price point? We're clearly getting the consolidation, as you can see. The pound still has a little bit to go. I'm interested to see if the 13.70 holds for the euro dollar. If that does, that could be quite important. And all we're looking to do is, if we break below the 12.22.55 in the gold market, we can use the 12.23.85 to mitigate risk. That's that active, proactive management of a trade, where we look to mitigate risk and be quite disciplined with our exposure. It formulates, you know, good, I suppose, a good foundation in which to trade. You know, do keep that under control. So we could be getting an opportunity shortly if we get a close below the 13.67. So let's see if this market closes and see if we get some extension. And again, we know the kind of trade size we're looking for. And this would be a relatively small stop loss if we just get this market. Let's bring it down a fraction. So if we get that market just rolling over to 13.67, we'd be happy to get into that. Maybe it's waiting for the euro, for the pound dollar to just pull back a little bit further. Okay, interesting. So we're getting a bit more strength creeping in. Let me see if there's any news events. I know there's some minor flash GDP figures. German unemployment change number is due out, well, in about 20 minutes. So French consumer spending, we've kind of missed the mark a little bit at 745, minus 0.4. We actually saw a minus 1.7. So we're waiting for the pullback in the pound dollar. So we've now seen the pullback. Now we want to see if we get price action that allows us to take it lower. What becomes a bit of a, not an issue, but a level that's worth taking note of is actually this higher level, the 27.90. We're only 10 pips above that level. And no doubt about it, you have a really strong level here at 27.77, but you often look for more recent lows, which can become strong levels of resistance. So if we just continue higher and we don't get a really strong opportunity to sell, then often is the case where you could look for this low in here for the market to bounce back to. So we've got a couple of options to look to get into it. On a 5-minute chart, just a really strong pullback, so that's in keeping with our approach. We want to see that strong pullback. We're now getting that opportunity. So let's see if this market squeezes below the 27.77. I just want to double check that level, make sure it's accurate. At 27.77. So we're getting this pullback in the pound dollar. So let's see if we can get into this opportunity at this level. So a floor has been created at these, well, potentially a ceiling has been created on this pullback, but the euro dollar has just kind of extended a little bit further than what we would, what we like from a structural perspective. But you can see that there's a lot of support in and around this price, so we don't need to be too accurate with our levels. There's definitely support in here, at these levels, providing resistance at that level. Nice strong pullback. Again, if we get that opportunity to get into it at these prices, we'll look to take it. So it'll be interesting to see if we are getting a series of reversals. At the moment, we're just getting a really strong pullback. But if this market rolls over and we fail to make new lows and then creates a bit of a structural failure to the upside, then some strength might start coming in to the euro. So maybe we're experiencing the continued dollar weakness over the Asian session. So looking at the pound on a 5-minute time frame, we're getting a strong pullback. We still expect these markets lower. Same with the gold market, we still expect it lower. It's currently pulling back a little bit, but we've currently got our stop loss just above a structure. So this market, we need it to work quite hard if it's to stop us out, and if that's the case, then we've mitigated risk and we've attempted to get into a trade for all the right reasons to the downside on the breakout, sorry, on the pullback of a nice breakout to the downside. So it does still stack up, but we do understand that there's lots of levels of support underneath these levels for the gold market. So we need to take that into account. So we're getting some extended pullback in the euro dollar, and the yen is strengthening a little bit against the dollar. So we're just getting a bit of a pause, a bit of a reprieve in the dollar strength. So you know, extra patience is required right now. You know, try not to preempt that trade too much. Try to wait for the setup to reveal itself. If this is a structural failure down below the 1370, then that actually gives you much more grounds to get into the downside. If we continue to get these rejections above, even though as I'm speaking we're sort of looking like it's going to squeeze higher, but let's see the close of this market, see where it sits. So now we're just squeezing a little bit further to the upside. So it just may be a case of just biding our time really with some of these dollar pairs. They've been on a strong move to the downside. So if we get a bit of profit taking at these levels and we get buyers coming in to these markets, pushing prices higher for a relatively short period of time, then so be it. We just need to, I suppose, exercise the patience that is needed when trading, and don't be too eager to actually get into it. So allow it to just pull back, and let's reassess things once we see things change. So we're just in this pullback phase as we speak. Okay, so we're getting quite a strong structural failure now. So technically speaking, this market we've made a low. The market's bounced to the 1222. We've pulled back. We've attempted to make a new low, and this has now failed. And we've really struggled to break above. If I just put another level in here. Eventually we had a break above in just the last candlestick, above the 1223. I suppose this is why we identify technical highs and place a stop loss above those levels, just in case you get this structural failure where you get a nice little bit of price action squeezing higher. And we know that this level is a level of support. So this level is very likely to provide resistance, and maybe that's the level that this market moves to. But if we start breaking above these highs, then that does constitute structural failures across the gold market for now. So it might be one of these situations where it might be, and I'll take you back so you can see what's happening, hopefully. So what we're seeing is this market really struggled to break above the 1243. We've been grinding higher now for 3 weeks nearly, and now we're getting this little breakout trade to the downside. So from a technical perspective, as we look at this market, is it likely to continue lower in the short term? Yes, it is. Can we stack the odds in our favor when we trade this market? Yes, we can. We can look to potentially get in on the pullback. On a 15-minute time frame, we've just had one positive candlestick. 5-minute, it's looking a bit more indecisive. Will we get this rollover? Very likely to do so. So if we get stopped out on this trade, so be it. It could be a case of the right trade, the wrong time, and we'll look to re-enter and see if we can still capitalize on the move to the downside. So this is the 1 minute time frame. So there's your structural failure above the 1223, and if we break below that, we definitely like to continue to stay into this market. It's interesting to note just these highs in here. There's a bit of a period of consolidation over the last 20 minutes, which is fine. And if we get a break below this level, then the trade to the downside still exists with a really small, tight stop loss as well. So it could work quite nicely. So we've had a pullback off the lows, period of consolidation, and now we're looking for that extended move lower with a strong appreciation and understanding of our exposure in these markets, so that we're looking to see. So now we just want to see if we get a close beneath this level, and then we can get in without thinking too hard into the pound dollar trade. So we're straddling the level of resistance, which is the red line going across the screen. What I'll do just for now is we'll just zoom in a little bit more on this. So you can see where it's bouncing back to this red line, just consolidates with this level over here, this low, and that's what we're getting now. So let's see if we can get into this. Okay, so there's our low, there's our close beneath this level. So if we get a little continuation, we want to make sure we're trading the right levels. So if we just get one more tick lower, we'll be getting into this trade to the downside. So in terms of our level to sell, it's just below that 27.76 level. Let's see if we get that rollover to the downside. So the euro is continuing to strengthen. Sometimes when you trade these markets, you get some negative news, i.e. Angela Merkel stepping down during what is a difficult time for the Eurozone, and which would be perceived as being quite negative for the Eurozone, and as a result likely to be quite negative for the Euro, and also if I just show you the Euro stocks. But we've actually gapped to the upside with the Euro stocks. Okay, we're currently rolling over a little bit as we speak, but nothing with any significant conviction. And the Euro is kind of strengthening on the back of the European Open. So that's quite interesting. Do we still expect it lower? Yes, we do. Are we going to get that opportunity or not? We'll obviously have to wait and see. We'll see if we get that opportunity. Okay, so we're just going to trade price action really, and we've got a line in the sand with the gold market. So if we get continued structural failures to the downside, or if we experience structural failures with prices pushing higher, then of course we've got a line in the sand there, so that mitigates our exposure to these markets to the downside. But hopefully we'll get this market just continuing to roll over to the downside, which it has every potential in doing so. So we'll just to show you from a price action perspective in terms of getting an understanding for kind of what's happening. The only thing we're seeing is a bounce off the 27.55, and we've got a nice strong pullback in this market, and we are anticipating this market lower for a very simple reason. We've now had a structural break last week. The market's continued lower. There's a lot of fundamental news behind a weaker pound. So what we have a situation is we have the technicals, the fundamentals and the sentiment all sort of merging together, and it can give you fairly decent opportunities. Now it'll be interesting to see over the course of the day whether this market actually extends below the 27.56, which we perceive it to do. Now it's currently experiencing a pullback, but we do expect this market below the weekly low to continue lower. So we think that there's plenty more scope to the downside in the pound dollar. What we need to do is to know and understand that we've pulled back off the lows. We're now in a period of consolidation. So it's just being patient and waiting for that high probability trade to kind of kick in. If it excels higher, so if we do break above that level, then we might be anticipating these markets to creep back to the 27.90 level and maybe look to sell it from these highs. But you know, if we get this market rolling over to the downside now in the next sort of 20 minutes, half an hour, then that all fits in quite nicely with our, you know, with the type of trade we're looking to take. So no major problems just yet. And if we don't get that break below the 27.76, we'll just exercise a little bit of patience. A type of something to be aware of in terms of identifying this high in here is that if we fail to break a new high and market just comes up to like this, and we create this bit of a floor, this is now a structural failure to the downside. So that's ultimately what we're waiting for, to see if we fail to make a new high and you get this market rolling over. That's a really nice setup, especially on the smaller term time frames. You just got to be extra patient, because you know you could sell at these levels and that doesn't necessarily give you the best opportunity. But if you attempt to make a low and then you fail to make a new high and then break that previous low, then that's a really strong structural failure to the downside, at which point you are stacking the odds in your favor when you trade these markets. And you can look for these opportunities time after time again. I suppose another example for this gold market would be, we've now got this little low in here, And if we break this, I'll just make note of the level. If we break this market, the 12.23.42 level, what that means is the market has bounced off, created a structural high, and actually then proceeded to hopefully create a structural low. And that's in keeping with our momentum trade, with our strong bias to the downside. All of that is in keeping. And what we do is, this could be the beginning of a downtrend, which is a series of lower highs and lower lows. So we would like this bit of price action to kick in from this level. So it will remain to be seen exactly what this market decides to do from here. We're very comfortable still to be selling this market. And if we do get a break lower, we can bring down that stop loss and mitigate some of that risk, hopefully sooner rather than later. Okay, so we're getting some interesting price action now. A strong rejection of the highs in the pound. You see how quickly things can change from needing to be very, very patient above the 27.82 to actually potentially getting in below the 27.76. So, and I'm looking at both of these markets. These are both kind of strong structural failures to the downside. We like these periods of consolidation. We like those moves lower. So we're just getting that move now in. So I'm going to get into just see if this market, if the euro dollar just closes below the 13.73, we'll get into it. We're not getting that just yet. Okay. Now we're just getting that little extension lower. I'm very curious now to see if we do close. So now we're getting that move. Let's get into that market and see if we continue lower at this stage. Quite simply, we can place our stop loss just a couple of pips, the 30.82 level, a couple of pips just above that structural high, and very small, concise stop loss. So we've got that close below this level. That's quite important for us. Let's see on the, yep, we're now extending lower as well. So let's also add this market to the mix. We've already got a structural high sitting in here. So again, just a couple of pips. The 85 level just sitting in there. And again, from a risk management perspective, these are fairly tight. We don't necessarily want to be exposing. So we're exposing 11 pips on the euro, on the pound dollar, and we'd have to be really patient for that. 10 pips on the euro dollar trade. Just needing to be just really patient with them. And we're we're still okay. We're just moving sideways, really. That's all. This market is just taking a bit of a pause. That might continue for a period as long as the structure still stacks up. And we still have these highs in here that this market needs to break above those levels, and we have our stop loss above. But you can see how precarious this is, because if we get a break above 12, 24, 35, then we're likely to get another sort of push and drive to the upside. So we'll have to just continue to keep a good strong eye on that. In the meantime, we might get some nice explosive moves in the euro dollar and the pound dollar. Not quite any. We don't really have a good setup at the moment in the dollar yen. When you capitalize on these structural failures and you get these little breakout moves, you then have a level of previous support which can become resistance. So if you do get these markets pulling back, it's likely to meet a little bit more selling coming into these levels. So for many reasons, you are actually technically stacking the odds in your favor when you take these trades, and you're just making them higher probability successful trades as a result. And you're adding another sort of toolkit to your armory when you're trading these markets. If you're trading support and resistance, and you're using that information accordingly, then it can work very, very well. Okay, I am very conscious of the time, guys. We do have traders over at the live trade room now, so we're going to switch rooms. Please do feel free to read the description below. Give us thumbs up if you can. Do subscribe to our channel, and we'd be delighted to have you join us over at the live trade room. Now, for the remainder of this week, we're certainly going to give you the opportunity to join us free for 14 days. So you got free access to the live trade room and over 76 live trade rooms per calendar month. And hopefully that will be a little bit of a no-brainer. And if you decide to join us, it is simply $9.99 per calendar month to continue your membership with us. And we've got a whole variety of education and live trade rooms available for you, with more products and services coming online very, very shortly. So we do invite you to be a part of that. So we'll switch over to the live trade room now. I'm just looking at the gold market, and I'm just conscious that this market is potentially reversing to the upside. We do have our line in the sand, which is our stop loss, so we're not renegotiating that in any way, shape or form. So we'll see how this market decides to play out. And hopefully we'll get a rejection like we're seeing here. This is exactly what we'd like to see. Very likely this market to continue lower at some point. So we might just need to be a little bit patient with it. So we'll see how we get on with that trade. So we're going to switch across now into the live trade room. Please do feel free to connect with us through our YouTube channel. Like I said, do press the subscribe button and the bell function as well, and that you'll be notified when we are live. And also through our Facebook, Instagram, Twitter and LinkedIn. All the details are there up on screen now. So thank you as always for joining us. Do take care. Do see the description below for more details, and do go to our website, which is www.thelivetraderoom.com, for more information about the education that we offer traders through the live trade room. So we hope you enjoy it. Thanks very much. Do take care. We look forward to seeing you soon. From everyone here, bye for now. And we'll be back again at lunchtime, by the way, at 1 o'clock London time. Bye for now.